So we are live now.
Okay. Good morning, everybody, and welcome to this fortnightly market outlook webinar. We thought this is a occasion where it was required that we share our outlook on the markets. Markets have corrected, and a lot of questions are there. Where are they headed? What was the reason behind the market correction? Vinay and Siddharth have joined. Vinay will share his insights from technical analysis and Siddharth from derivatives. Good morning, Vinay.
Yeah, good morning, Devarsh bhai, and welcome you all in this technical and derivative market outlook webinar.
How are you doing, Siddharth?
Yeah, I'm good, good. Welcome everyone.
Okay, so without further ado, let's start. So the most important factor which everybody is asking about, what are the reasons behind the market correction? We can go to the first slide, Vinay. Yeah, so the factors behind the market correction. So the important thing is that there were certain important factors which contributed towards the fall. And the first and the foremost was the earnings and the GDP slowed down in the last quarter. So, as we know, stock prices are slave to the earnings. And if earnings are not growing, market price is correct. And we saw that the Nifty earnings were more or less in line with the price rise. But at the beginning of the year, in our big report, we pointed out that the mid cap and small cap have risen more than their earnings growth. So there the expectation was that there should be some moderation in the valuation. Second, compared to the rest of the world, we kept our interest rates higher. Liquidity was tight. It was in deficit for many months because our Reserve Bank was persistently worried about the higher inflation. And inflation continued to remain above 4, and that had resulted into tight liquidity. The third important factor was because of the Donald Trump's election, there is a lot of uncertainty about the global trade and about what kind of tariffs will he put on which countries. Recently, we have seen that the President Trump and the Prime Minister Modi's meeting have been fruitful. We have reduced duties in luxury cars. Uh, there is some alcoholic beverages and all. There are negotiation, and after the negotiation, there will be another round of duty cuts expected out of India. And obviously, the elevated valuations in the mid cap and small cap segment. Many of us know that the many stocks were going up and they were in momentum, though the earnings have not been stronger in those companies. Now, are these all four factors solved? What are the major changes in last few weeks? Whether will this be sufficient for market to bottom out or not? That is the main question. So first, GDP growth was constrained because of the government expenditure. The growth in the economy is dependent on the either the private capex or the government capex and the consumption. Now, consumption was more or less tepid. Government was the main driver of growth, and because of the election, government did not spend money, and that's why we saw slowdown in the government capex. Since closure of the election, we have seen that in January, February, March, government is going to do a lot of capex, and because of that, the January, February, March capex numbers are likely to be 20%. So last year's capex, which was constrained, are likely to be very strong in these first 3 months of this year. So the economic number coming out from the January high frequency data is improving. When we see February and March numbers, government is going to spend a lot of money, so that will start reflecting into economy from April. What about the next year? So government has already budgeted about 15.48 lakh crore worth of budget in the capex plan for the next year. That means government has given sufficient amount for the capital expenditure to expand. Capital expenditure will lead to investment, gross fixed capital formation, which in turn will lead to growth. And this time we are not able to spend the allocated money because of the late start. So this next year, it is expected the government will start spending money from April itself. So first 6 months, we will see a lot of money being invested in the economy, and that should again result into some growth. Second point, higher interest rates and tight liquidity is being solved. Government has appointed new RBI governor. New RBI governor under the new MPC has started with a rate cut. We have seen already 25 basis point rate cut. We have seen forex swaps and rising OMOs from RBI. 40,000 crore worth of OMOs have been done. So the liquidity problem which was there in the banking system has been solved. So the first, the domestic GDP growth problem is more or less solved. We'll see the results from April to June. The higher rates have been solved. Tight liquidity problem has been solved. The consumption side boost have been given by the union budget in the form of income tax chops. So that problem also we are seeing, going to see the discretionary consumption as and when the income tax saving starts coming in the next financial year. People are likely to save between 7 lakh and above, around approximately 1 lakh rupees in the income taxes. So that incremental amount should flow into some kind of consumption boom, and especially on the consumer durable side, not on the staple side. People may not buy more soaps or may not start eating more, but obviously they will spend some money in electric goods or on vacations. That means the consumption should get a boost in the next financial year. Now, the most important thing is the valuation and higher prices. So whether prices have corrected enough to see the imbalances coming back into the equilibrium. So we see that the Nifty mid cap, Nifty small cap have seen a sharp correction from high. Nifty mid cap index is down about 19% and small cap index is already down by 23%. Nifty itself is down by 13%. So substantial problem of higher prices have been corrected because of this correction in the prices. So the valuation is determined by two things: the earnings and the prices. Prices have corrected by 15 to 20% on the index side, maybe 30%, 40% in many of the stocks. Valuation also is supported by the earnings. Earning growth is stable and earnings are likely to grow 15% in many of the mid cap and small cap stocks next year. So the valuation gap is being narrowed. Now, what has happened in the global indices and Indian markets? So as you can see in the screen, the US markets have gone up about 4 to 5% in last 1 month. From 14 February to 14 January, the table on the right shows that they are up about 4 to 5%, while Indian markets are more or less flat. Many markets like Hang Seng and DAX have gone up in double digit, while Indian mid cap and small cap have fallen by 10%. So if you see between gap of Hang Seng index of 17% and small cap fall of 10%, 27% delta has been generated between Hang Seng and Indian small cap. So this is the stark reality where our markets have corrected sharply while other markets are stable, and many markets in the Asian and European markets are actually surging. Same is the case for last fortnight. We see that the many of the markets like Hang Seng are up about 10%, while Indian markets are down about 2% on the larger indices, and Nifty mid cap and small cap are down about 8%. So this is the gap in the valuation which was there, now is being corrected. So we have already done substantial correction. How far these indices can go, what are the different important levels, how and when the markets will bottom out, my colleagues Vinay and Siddharth will share. Now coming to the sectoral indices, as you know, from the beginning of the year, we have been asking people that the technology and banking are the safe area, healthcare. Usually when the markets correct, IT and pharma usually are the ones where you can find some solace, and that's what is reflected on the table which you saw in the screen. Banking as the one of the favorite sectors of ours. We think that the banking valuation are cheap. Bank stocks have not corrected compared to the other parts of the world. And we feel that the going forward, when markets bottom out and when markets start rising, banking is the sector which will lead the markets higher. So We continue to like banks. We have been recommending banks as one of the investment ideas, and we will also, going forward, we'll keep issuing new ideas in the banking side. So this is the picture of the markets. Now, what are the technical charts telling us? How much uh, correction is still pending? Where are the strong supports? From which level we can bounce back from a technical perspective? Um, I'll request my friend and colleague Vinay, and then eventually Siddharth to share their views about it. To sum it up in Hindi, as many of the participants wants to also do these webinars in Hindi, चार मुख्य कारण थे. गवर्नमेंट का कैपेक्स बहुत स्लो था, जीडीपी ग्रोथ बहुत स्लो था, लिक्विडिटी टाइट थी, वैल्यूएशन बहुत हाई थे, और इसके कारण मार्केट में करेक्शन आया है. आरबीआई ने अभी इंटरेस्ट रेट कट किए हैं, लिक्विडिटी मार्केट को दी है, गवर्नमेंट ने इनकम टैक्स कट किए हैं, पैसा कंज्यूमर उपभोक्ता के हाथ में दिया है. जीडीपी ग्रोथ अच्छा आएगा आगे का. हाई फ्रीक्वेंसी डेटा जो हमें बताता है कि जीडीपी ग्रोथ आगे अच्छा आएगा, और जो अर्निंग्स है वो अभी अच्छी है. अर्निंग्स आगे जाके भी अप्रैल में जो जनवरी फरवरी मार्च के नंबर्स आएंगे वो अच्छे आएंगे. तो अभी हम करेक्शन में है. करेक्शन अभी लास्ट फेज में है. कहां तक हम नीचे जा सकते हैं, कितना नीचे सपोर्ट्स है, वो मेरे कलीग बताएंगे. पर ये एक अच्छा करेक्शन हो चुका है. अब यहां से बहुत बड़े करेक्शन की डर नहीं है. हमें लगता है कि अगर आपके पास पैसा है तो धीरे धीरे आपको नेक्स्ट जो लेवल्स विनय और सिद्धार्थ बताए वो लेवल तक आपको धीरे धीरे उसको डिप्लॉय कर सकते हैं. एक दूसरा, अगर लीवरेज पोजीशन है तो ऑब्वियसली जैसे हम बताते हैं लीवरेज पोजीशन को कम कर रखना चाहिए. मार्केट जैसा लास्ट 4 साल में था ऐसा नहीं है. अभी यहाँ से जो स्टॉक स्पेसिफिक पैसे बनेंगे, बहुत सिलेक्टिव पैसे बनेंगे. तो ऐसा जरूरी नहीं है कि आप कोई भी स्टॉक मार्जिन में लेके खड़े हो या तो आपका बहुत बड़ा लीवरेज पोजीशन है. तो आपको वो रिस्क को हमेशा कंट्रोल में रखना है. और धीरे धीरे हमें लगता है कि मिड कैप स्मॉल कैप बॉटम आउट होंगे, और वो लार्ज कैप से जो रिटर्न दिया है, जो बहुत ज्यादा फॉल हुआ है, उसको वो करेक्ट करेंगे. तो ग्रेजुअली अभी लार्ज कैप की जो सेफ्टी है उसको हम धीरे धीरे पैसा मिड कैप और स्मॉल कैप की तरफ ओवर द नेक्स्ट couple of weeks to 1 month we should deploy. If you are aggressive, if you want to become conservative, आप लार्ज कैप में बने रहिए. वहां पे करेक्शन भी कम होगा, सब सर्टेनिटी ऑफ राइज इज लिटिल हायर. तो बहुत सारी चिंताएं हैं, बहुत सारे मार्केट में करेक्शन है. हम ये बताना चाहते हैं कि बहुत सारा करेक्शन हो चुका है, और अभी ओवर द नेक्स्ट कपल ऑफ वीक्स वी विल लाइकली टू बॉटम आउट. कहाँ पे सपोर्ट है, मेरे कलीग विनय को मैं इनवाइट करता हूँ कि वो आगे शेयर करें. ओवर टू यू विनय.
Thank you, Devarsh, and welcome you all again in this fortnightly market outlook webinar. So I'm going to speak about the technical developments on global indices, in benchmark indices in domestic markets, and we will also try to do some intermarket analysis, and we'll try to conclude how markets are looking and where indices are headed for the coming fortnight. So without much ado, let us start. So this is a Nifty daily chart, and let me pointer. Yeah, so this is the Nifty daily chart, and this was the all-time high. This was 26,277, and this was the intermediate high, which was formed around 24,800 odd level in the month of December. And if we adjoin this trend line actually acted as a very strong resistance. So whatever rise which was seen previously in the recent past, it took resistance on this trend line, and Nifty found a top at 23,800, and again turned southward. So from the 23,800, it has again come to 22,800. 1,000 point correction was seen after taking resistance from the trend line. So this was a crucial one. And this is green line. This is nothing but the 50 days EMA, the exponential moving average. And this red line is the 200 days EMA. So now we can see that the 50 days EMA has reached below the 200 days EMA. This is definitely a negative development for the medium to long term. But how it goes, we have to see other factors also technically as well as the fundamentally. But this is one of the thing we can always keep in our mind, that technically the continuation of a downtrend is still there. As far as short term is concerned, On Friday, we saw that Nifty found support around 22,750, 780 range, and this is nothing but the previous swing lows. In the during the day, it breached that previous swing lows of 22786, 22796, but it did not sustain below that and actually bounced back from that level. So we can say that there is strong support between 22,750 to 22,800 range. Unless we close below that, we should not take a fresh short position. This is what chart is suggesting, because this is a triple bottom kind of formation, and unless we close, as I said, unless we close below 22750, we should actually take our short bets off and wait for some stable market. So as of now, we can say that after falling almost 13% from the all-time high, Nifty is trying to take support at 22,800. On the higher side, this 50 days and 200 days EMA are placed at 23,550 to 23,600 zone. So positionally, we can see that in case of pullback, in case of recovery in the market, Nifty could take resistance in the zone of 23,500 to 23,600, which is derived from the 50 and 200 days exponential moving average. And if you also consider this trend line also placed around 23,400 odd level. So we can say that overall 23,400 to 600 zone is a very strong resistance positionally, and we are in continuation of a downtrend. Now let us look at the weekly chart of Nifty. As you can see over here, this is a weekly chart and this is called a falling wedge pattern. These both trend lines are actually downward sloping, but the slope of this downward sloping trend line is slower and low, the not in that much deeper, and that is why this is called a falling wedge pattern. And this is the pattern which is actually giving support around this level. So this is also suggesting that not only the triple bottom around 22,800, but this falling wedge pattern adjoining the previous swing low also provides the support near 22,750 to 22,800 zone. This is another evidence. But we have to also look at the overall position of the RSI. RSI is placed at 40. I'm talking about the weekly RSI, which is still not oversold. So it might happen that Nifty could slightly go below this level and try to find another support at the lower level. I will also give you the brief about what the positional, where is the positional support for the Nifty through the monthly chart. Now this is a monthly chart of the Nifty. As we can see over here, this is the fifth consecutive month of the fall in the Nifty. So in the past, we have seen that Nifty has never fallen more, fallen for on monthly basis for more than 5 times in the history. I'm talking about since 1995, Nifty has not fallen on for more than 5 consecutive months. So this is already, we are already into a fifth consecutive month of fall, and we have seen a 13% correction in the Nifty. Now, if we were to take the swing, which was seen from the 4th June low when election result came in the India, at that time Nifty hit a low of 21,281, and after that it went up and hit an all-time high of 26,277. If I were to see the retracement level, 76.4% support comes in at 22,460. This is the next support for the Nifty as per the Fibonacci retracement. We have already broken below 61.8%, which was at 23,200. Now, as per the Fibonacci, next support comes in at 22,460. So, if Nifty breaks the recent low of 22,750, then we can expect it the further drag and further fall towards the next support of 22,460. This is the positional support for the Nifty. Now also look at the breadth of the market. This is the NSE 500 breadth analysis. We have considered the percentage of members which are trading above the 200 days moving average, and this number has reached to 14%. What does this indicate? We can say that only 14% of the NSE 500 stocks are trading above the 200 DMA. And in the past, if we look at the previous historical falls in the market, recently during the Russia-Ukraine war, this number was at 14 odd level, 13 odd level. In 2018, the number reached to 12. And in previous history also, when major falls were registered, this number went down to 12, 11 numbers. And now we have already reached to 14. That means we are marching towards the oversold zone. So we can take contrarian bet on the basis of this data. Whenever this number achieves on the lower side, we can expect a bounce back from the that oversold zone. So we are not exactly at the oversold level right now. The number is 14, but once this number reaches 11 or 12, from after that, we can expect a strong bounce back in the market, in the broader market I'm talking about. So we can say that we have already done 80 to 90% of the typical fall of the considering the historical falls. So it might happen that there could be another round of selling in the mid cap and small cap, which could further drag from this level. But we have almost reached to the oversold level, so we are near to the bottom as far as short-term trend is concerned. This is what the breadth is suggesting. So this is a good number, and we can expect some bounce back after some extension of the fall. Now look at the performance in the developed market. This is nothing but the MSCI World Market Index chart. This is altogether reverse chart. This is continuously going up. In fact, if we were to look at the daily chart, yesterday itself, this World Market Index, the developed market index, has broken out from the consolidation. So we are clearly underperforming the developed markets. If we look at the emerging market is also into a clearly uptrend. For last 3 weeks, we can see that this has been rising from this level of almost 1,000. It has reached to 1126 level. So emerging markets are also outperforming the Indian markets right now. So currently, Indian markets are underperforming on a gross margin. This is a ratio chart of MSCI India Index versus MSCI Emerging Market Index. So if this ratio chart is going down, that means if the MSCI India market is underperforming the emerging market. This means this breakdown was clearly was seen 2 weeks back, and this was actually shared with our weekly technical market outlook presentations as well as our report. We clearly mentioned that the Indian markets could underperform the emerging markets, and that has actually happened. And this kind of underperformance we observed in our Indian markets against the emerging market. Same has happened with the developed market also. We since the month of June we started underperforming the developed market index like Europe and US, and this is continuing. So from the month of June 2024, we are continuously underperforming the global developed market index. Now, if I were to see the previous history, it has almost reached to the March 2023 low. What does this indicate? That this can find support here. So we can stop underperforming the world market and developed market index as per this chart, because this chart suggesting that we have reached to the previous support level, and this could turn out to be a bottom, and I'm not talking about the price bottom in the index, but underperformance bottom against the developed market. So we can expect some sort of catch up rally, or the catch up against the developed markets. We can stop falling against the developed market rise. So this we can expect, considering this development on the market. Now I would like to conclude here. Nifty is to a continuation of a downtrend. Short-term support is seen at 22,750 to 22,800. Below 22,750, Nifty could slide down to 22,460, which is a positional support. Short-term resistance for the Nifty seen at 23,235. 23,235 is nothing but the recent swing high on the daily chart. This needs to be tracked. For taking a bullish view, we need to cross this level to confirmation. For the confirmation, so 23,235 is a strong resistance for the short term. Once we cross that resistance, as I said, 50 and 200 days moving averages are placed near 23,600. This is a positional resistance above 23,235. That indicator suggesting some more pain left in the broader markets. But as I said, that we have almost completed 80 to 85% of the correction in mid cap and small cap, considering the previous bear market cycles. So we can expect some more pain, but we are almost to the oversold level. India has been underperforming the global markets, and that trend is still continuing. But some indications are there that we could stop underperforming the global as well as the emerging markets from here. So strategy, what should be the strategy for the traders? Traders should adopt the cautious approach, especially in the mid cap and small cap segment. Mid cap and small caps are falling more right now. As of now, margin of safety is seen in the large cap space. In case of pullback swings, long trade should be initiated only with the strict stop losses. Any level below 22750 could push Nifty towards the next support of 22460, which is the Fibonacci support. On the higher side, 23235, as I said, is a short-term resistance, followed by 23,600, which is a 50 and 200 days moving averages. These are the crucial resistances to be tracked in the coming days, and this is what we are suggesting. And go with the flow, remain cautious on the market, and if market shows some pullback, you should trade it with a strict stop losses. So this is what I wanted to share. Now I would like to hand it over to my colleague Siddharth, who will give his view on the basis of derivatives. Siddharth, over to you.
Yeah, thanks, Vinay. Yeah, my screen is visible.
Yes, Siddharth.
Yeah, and it's in the full screen mode also. Yeah. Yeah, thanks, Vinay. Welcome to participant HDFC Securities Prime Daily Weekly Derivative Outlook webinar. I'm Siddharth Deshpande, Technical and Derivative Analyst. Today's session will discuss about Nifty and Bank Nifty trend, sectoral analysis, FI activity, key trading levels, like discussed already with the Vinay, and the market sentiments. Yeah, let's start. So this is a Nifty chart of last 5 sessions. If you can see that Nifty is continuously falling from the level of 20,800 and closed near around 20,976 level in futures, which is almost down by 2.68% in a week. Where we can see that open interest, put open interest continuously rising from this level to almost 2.69 contracts, which is almost rise of 8.34%. So which indicates that there is a buildup of short position in the Nifty. If you see at put call ratio, which was trading around 0.82, 85 level in the starting of the week, it has almost fallen to 0.77 level, and 0.70 is the oversold level. 0.65 to 0.70 is the oversold. So it's continuously falling towards that level. So if Nifty PCR reach to that 0.65, 0.70 level, we can expect a bounce at least suggested by PCR. Next is the employed volatility. Employed volatility start of the week was around 8.1 and it has fallen to 15.1. So slightly we have seen a drop in employed volatility, which basically reduces the risk participation. Yeah. This is the next Bank Nifty chart. Bank Nifty has also fallen 2.11% in the last week, where compared to we have seen the massive OI increase of 30.46%, which is a massive, which indicates that build-up of short position in Nifty in the Bank Nifty last week, and IV stands at 17.90 compared to other Nifty. The IV is on the higher side. Now we'll move towards the PCR. Basically, 23,000 to 20,300, where the maximum call open interest is there, where we are seeing a call writing, and at around 22,500 to 22,000 level, where we are seeing a put writing. So nearest support lies around 22,800. Nearest resistance lies around 23,000, followed by 20,200. If we are able to reach that 20,200 level, then Nifty gradually will move towards the higher level of 22,500. On the lower side, we can see a support, nearest support is around 20,800, I think, which is already currently Nifty. It's just sustaining up below that, above that level. And next resistance lies around 20,500, where the 66 lakhs number of share contracts is already been shorted by in the put
Siddharth,
category.
Siddharth, sorry to interrupt. Can you do in a slide show manner presentation mode, please?
So
Is it a presentation mode?
yeah, now it is presentation.
Yes.
Yeah, okay. So now we'll move towards the Bank Nifty. Bank Nifty has a similar chart, similar put call ratio, where the 49,500 followed by 50,000, where the maximum call rating is happen. And if you see the series wise, then 51,000 is the maximum call rating is already there, which is indicating a resistance level. And on the downside, 48,500, 48,000. So we can expect a Nifty range. If it is breaching and sustaining below that level, the next support lies around 48,000 for the Bank Nifty. Currently, Bank Nifty is trading around 49,334 level. So almost 1,000 point correction is possible if Bank Nifty breaches important support level like 49,000, followed by 48,500. This is basically a weekly sectoral open interest analysis data, where we can see a major buildup of short position sector wise also. This is the price and this is the open interest. So major short is being built up in power, chemical, and pharma sectors. Next is in FI long to short ratio, which is continuously trading around 0.19 level in the last week, which indicates basically the FIs are clearly showing that short indications over here. Next is basically this is a FIs and client position, where we can see FIs are still creating fresh short positions while clients has reduced his long position in the last week. Next is sectoral open interest change we already shared. Or we'll go to the overall outlook. So basically, short buildup of seen in Nifty future on a weekly basis, and highest call open interest is currently around 23,300 level, suggesting resistance around that level. And on the downside, where 20,800, where the maximum put writing is happen, followed by 20,500 level, suggesting a support around that level in the near term. The outlook for the Bank Nifty is around. Bank Nifty also saw massive short built up in the last week, where the we can expect a range of Bank Nifty towards 48,000 to 50,000, where 48,000, 49,000 has a maximum put writing. So we can expect a support near that level. If it is breaching that support, then gradually Bank Nifty will move towards 48,000. Over to you, Vinay, for the question and answer.
Yeah.
Yeah. Am I audible?
Yes, they were.
Yes.
Okay, so there are some questions in the chat. Put call ratio built up, but the same time ratio is going down. So yes, so put to call ratio basically means that number of calls being written is higher. That means the put call ratio will go down. We use it as one of the contrarian indicators that if the number goes down to a very high level, uh, then only it suggests that the more amount of call have been written, and then there could be a sharp short covering. So this is a follow-up indicator. It is not a concurrent or a leading indicator, but price usually is the one which determines whether the option writers will cover their positions and will try to shift to a higher level. So uh, if it becomes very low, and if it gives you the indicators like the breadth indicators, the uh, stocks above 200 DMA, all these indicators suggest the trend, but at extreme this becomes the contrarian indicator. So many stocks have corrected, and large cap stocks like some stocks which we have given at the beginning of the year as stocks to accumulate. Uh, those investors who are looking to put money, this is a good time as any to start accumulating those stocks. Any other questions? So sector wise, banking is the one which we think that should do well. Apart from banking, uh, we think that the cement results are good. Cement as a sector will do well. So we will try to give you pick stocks from the cement area. The pharmaceuticals are also showing good growth. So apart from IT and pharma, banking and cement, defense is one of the areas where we are likely to see a lot of money being spent over the next couple of months. By March end, we are expecting government to spend huge amount of money on the defense side. So that's where we have given some of the investment ideas. So these stocks are likely to outperform over the next 6 months to 9 months. Obviously, these are mid cap and small cap, so they will do well as and when the markets start bottoming out. And markets will start bottoming out as and when the leverage positions and the forceful selling which is happening in the market right now will stop. USD INR, we have given 87 to 88.5 range for the next 3 months. We don't feel that it is going to go to 90 unless some globally something drastic happens which make dollar very strong. Dollar index has started falling from 109, 110 levels. It is correcting, and that should support USD INR. Lot of pain are there in the mid cap and small cap, but mid cap and small cap do not lead the market, so they will not be one the first to bottom out. Always the, as I always try to say, index or the Nifty is the dog, and mid cap and small caps are a tail. Unless the index bottom out, mid cap and small cap should not be expected to start doing well in the shorter term. Obviously, the long term investment opportunity, the percentage return is always higher in mid cap and small cap. So they fall more, and when they rise, they will rise more also. So we have to understand that fact and act accordingly. Act according to your risk appetite and asset allocation plan. Any sector which is looking particularly strong or weak from technical perspective, Vinay?
Yeah, so relatively IT sector has been performing well, and the as we can see, the private banking sector has been doing well. So recently we saw that Nifty breached the lowest level of the recent down swing, but Bank Nifty is trading above that. So basically, some of the NBFCs like Bajaj Finance, Bajaj Finserv, I'm not talking about the stocks and sector. These are not the recommendations, but some of the NBFC stocks, private banking stocks, as well as some IT stocks which have posted a good result can outperform this market. Some telecom stocks also can do well. So these are the relative better stocks on the charts and can continue to outperform in this. So basically, technically, if I were to see the private banking, NBFC, and IT, these are the three sectors one can track for the outperformance in the coming days. Devarsh, are you there?
Yeah, so one question is from Yogendra is this the right time to start buying for the long term? So yes, it is a right time provided you have the sufficient time, because as Vinay and Siddharth pointed out, there could be some correction which may last for a few weeks, and after that we can see the correction recovery in the market. Mir is asking, is it advisable to keep long positions in the MTF? So yes, actually it is a good time to start picking up small cap and mid cap on the MTF, provided you keep the sufficient margin, so that if there is any drawdown, suppose there is 10 to 15%, 20% correction in this stock you hold, then you should have the enough margin to keep those position intact. As we pointed out, this is a phase of the correction. We may uh, eventually bottom out near these levels. There could be some more downside, and the MTF position, the problem is not on the overall position, it could be on the individual stock. So if you happen to pick a stock where a quarterly result is not up to the mark, or say a pharma stock where US FDA action is there, or some order cancellation is there, then that particular stock may go down 20, 30, 40%, and then it hurts you in the MTF side. So rather than having a concentrated position on a leverage side, it is always advisable to create a 7 to 10 position of MTF portfolio where the risk is distributed among various sectors in stock, and enough margin is kept so that whenever there is a sharp drawdown, you are able to handle that position. If enough maturity and risk management is there, then I think this is a good time to start building MTF position, especially gradually shift away from large cap to mid cap and small cap. As the recovery will happen, those stocks will give us higher returns. Hopefully, we will see much better market outlook after the next fortnight. Let's see how it pans out. But right now, it is expected that the markets will eventually, we are near the most of the correction is done. The fundamental factors suggest that over the next 3 months, we will see much better sentiment than what we are seeing right now. All right. I think we have answered enough questions. We can, if you can see any of the questions, Vinay or Siddharth, if you want to see, some technical questions are there in the questions from Rajkumar. If you want to answer that.
Yeah, so Rajkumar is asking, does Nifty look like a W pattern on hourly and daily chart with breakout level of 232,350 or 24100? So basically, as I said that there is a strong support around 22,750 to 22,800. There is a triple bottom formation also. There is a falling wedge pattern also, which is providing support at this level, this range. So definitely we can expect some bounce back, but we will go step by step. There are cluster of resistances looming at higher level before the 24,000 levels. So yes, as I said, 23235, this is a immediate swing high. If that is taken out, we can expect rally towards the 23,600, which is derived from the 50 and 200 day EMA. So I'm again repeating that we should go step by step. We should not anticipate any bigger target right now. We'll once first hurdle is taken out, then we can expect and anticipate the next target. But as of now, 23235 is the first resistance, followed by 23600. If that is taken out, then we can expect rally towards 24,200 odd levels. But we'll go step by step, and we will follow the stop loss and the support levels also.
Basically, one should
is asking about PSU banks. Yeah, Siddharth.
Yeah, one should basically look at that 20,700, 800 level. Nifty should hold that level. Then I think other things are possible. So if it is breaching that level, then we can expect a minor correction towards 20,500. So currently, anybody watch should be there on 23,000, 22,700, 20,800 level. Yeah, over to you, Devarsh.
So should we invest in PSU stocks? So not across the board PSU stocks, but PSU banks, PSU NBFCs, and in the defense side, I think there are opportunities. If you invest now, over the next 3 months to 6 months, we can expect some kind of recovery in those PSU banks and PSU stocks. Okay. So medium to short term, Samir is asking about the sectors. Sectors are consumption, the consumer durables will bottom out and should do well. Banking will continue to do well. Cement is the sector where we may see a lot of growth over the next 3 months to 6 months. IT and pharma are defensive. They may continue to do well. So these are the various pockets where you can look to invest over the next 3 to 6 months. All right, we have answered all the questions which are there on the Q&A box. If you have any questions, you can always reach out to us and we'll be more than happy to answer those queries. Thank you all for joining and we'll conclude the call. Thanks. Have a great weekend ahead.